So already started sharing my system screen. So please let me know if you're able to hear me properly. Is there any issue? Kindly let me know in the chat. Yeah. Thanks, Pratish, for confirming. So voice is also clear. Yeah. Thank you. So yeah, 2 more minutes are there. So we will kickstart in another just 2 to 3 minutes. So before that, I just wanted to know, Pratish, by any chance you are from Chennai? So, so right. If anybody is new, okay. So let's kickstart our session. Okay. So welcome to 02 Pro version 2. Okay, I'm part of the initiative free learning. So you will get all the sessions, okay, even live and recorded. So this is our YouTube channel, Tanish Ras Capital. If somebody has not subscribed, please subscribe to this channel and keep watch on whatever the videos we are updating. So again, coming to the playlist. So we have different playlist. Okay. So 02 Pro grooming is the earlier one, which we did in Corona period. So that is a, you can call it a 02 Pro 1. Okay. So here you will have all the old videos, all the basics are covered here. And the next thing is this 02 Pro V2 grooming. Okay. So here you will get all the current year, whatever the new version of learning which we are going through. Okay. So if somebody is not looking or not aware of our YouTube channel, so this is the YouTube channel. So you can be part of this. And then, so last 2 videos, we have done first session on introduction on how to do and how do I manage trend. The next session, systematic trading. So how I look at systematic trading and how I do all my stuff related to systematic trading we have gone through, and even many of the systems or small system I have shared in the session 2 also. And now coming to today's session. So this is a session where we will be discussing how to handle positional strangle. Okay. So this is all about today's session. So how we are going to enter a strangle, manage a strangle, on what basis we are going to enter, or what are the major adjustments I have done. And hope you are aware, you're already part of our Telegram channel also, right? So I've been posting here from, right? So like this I started, right? How to manage a positional straddle. So I've been started sharing. So how I'm doing. So the thing like whatever I'm trying to do it on my own capital or the real trades, I'm going to share it with you. So try to learn whatever you are able to grasp from the sessions. So coming to again, so this is what, so how you're going to handle your positional strangle. So this is all about today's session. And what are the touch points? What we are going to, so first of all, what is strangle? Basic things. Okay, we will not deep much into what is strangle and all those things. Very base level understanding we will touch. Whether, so how, whether you need to take too far or too close. So what is my rule in terms of when I take a straddle or strangle. Okay, so today we are going to talk only about strangle. And then weekly position or monthly position, whichever is preferred, or which are all the pros and cons, or which are the way to do it. Again, when it comes to risk management, what I mean by risk management, how one needs to be doing, and then position sizing. So let's assume that if your capital is something like say some extra amount, so 10 lakh. So how you are going to position these triangles according to whatever the rules I'm saying, and again what are all the adjustments rules what I'm following, and basic my simple tricks which I used to do throughout my tricks. So whatever I'm doing, I will try to share what are all my basic simple tricks. Okay, you can call it as it's a cheat code which I'm following. So you can also follow the same. Okay, provided you understand what is the exact understanding of what we are going to discuss. So this is all about my team. So we are part of Tanish Capital. We are 15 years of stock market expertise in investing and trading. We in our team we have CRISIL certified wealth manager also. We do financial planning, everything. We do dedicated algo developers, and we are part of prop desk expertise. And also we are managing more than 50 CR in equity portfolio and 10 CR in option portfolio. This is all about us. You might be already knowing more about us. So what is first of all short strangle, right? So all are in line, right? We can kickstart our session. So what is short strangle? Short strangle, sorry. So generally how you define short strangle? So you are going to sell a OTM call, right? You're going to sell a OTM call, OTM put. So that means what? So well, let's assume that market is somewhere here. So this is the at the money. So you are not going to sell here. You are going to sell somewhere here. Okay, market is somewhere here. You are going to take the call on the OTM. You are going to take the put on the OTM. So if you are selling, it is called short strangle. If you are buying both the legs, then it is called long strangle. Okay, basically we are concentrating on more on a kind of low risk, high probability trade. Okay, so that is the reason why we directly going into short strangle. So if somebody asks what is short strangle, very simple. Let's assume that market is somewhere around 42,000 now. Okay, so how do you define a strangle? Either 500 point or 200 point. So whichever distance you keep. So here 300 points if I keep. So 300 points away, if you sell a call, 300 points away you sell a put, both are OTM. That becomes a short strangle. So hope here you might not have any issues in understanding this. I hope many people are already started trading. So I'm not just going into much detail into the part. So what is the payoff? So again, why we need to concentrate on the payoff? Very simple. So assume that you are going to sell somewhere, right? So this is the place you sold a put, and this is the place you sold a call. Okay. So if I do one lot, both. So after this level, then my risk keeps on increasing. Okay, because this is a short strangle and no, it's a open leg, right? So if somebody wants to look it on this basis, okay, let me assume that instead of showing it in this paper, okay, so I'm just pulling a sheet where you can see. So let's assume that now if you concentrate on Nifty or Bank Nifty, whatever it is, so whichever the payoff you wanted to see. So if I wanted to see 19th of January, and then so you know what is the current market price. 42,116 is the future price. So spot wise, it is trading around 42,000 somewhere. So you can treat it as 42,000 or 4,200. So generally, how I take the basis somewhere where the premiums are matching closer. Okay, here 237 and 227. So this is the place for me. This is the center place. Okay, so from here on, I have to take. Let's assume that now if I take 400 points away, so something like this, and again 400 points away, something like this. Okay, so when you sell this, it becomes a strangle. Okay, so that means I'm taking 400 points away strangle. So one lot if I'm selling again, so 42,600 one lot if I'm selling. So this is the basic definition of strangle. And what is happening? So what is the max profit? So whatever you sold is the max profit. So max profit is 3 way. And since we have sold openly, the risks keep on increasing. Okay. So first try to understand what is the characteristics of this. So what is the range here? Where this green color is there, that is the range. Max profit is this much. Okay. Max losses. If suddenly market makes a move, so if immediately if it goes tomorrow here, this is the loss. Again, when it keeps on moving, then your loss keeps on increasing. And what is the capital locked? So to take this position, roughly 1.5 is the capital. Okay. So you can treat 2 lakh as the 1 lakh strangle as the reference. So generally what I take is 2 lakh as the reference. So here what and all we are seeing, so this is the BEP, right? This is the BEP point, because where the profit changes to negative or the loss changes from here to positive. So these are all the points are called BEP. So where below this or above this level, your loss will start. So that is the basic idea about what is this triangle. Okay, I have just represented in this way. So just for understanding purpose, you can understand this is the maximum profit you can see, and this is the max loss. So max loss in the sense, as the price move beyond this, okay, from this level it keeps on increasing, then it will keep on draining. So that is the idea about it. So why you need to understand all these things? Because we need to know what is the max profit we are targeting, what is the range we are targeting, and what is the max loss. See, max loss is infinite, but only thing is you need to cut down some point what is your loss bearing ability. So based on that, the risk management will come in. So basically first understand what is this, and then, so now we have seen 400 point as the example. Should we take closer or should we go far? Whichever is better. Now the question arises here, right? Can you tell me whichever is good as per your understanding? You can use the chat. You can use the chat. Which you feel like, so let's assume that now this seems to be like 300. Okay, let's assume that this is 300. Okay, just drawing to the scale, this is somewhere like 700. Okay, that means what? So from here, this is 700. From here, this is 300. So 300 points away if I'm doing, which one will be better? So J Siddhapura saying far. Okay, far is better in the sense what? In what terms? Either in terms of profit, because see, something like this, if you do this now, so because this is one scale, so if you sell little closer, 3,000 rupees is the profit, right? So let's assume that now I'm shifting my, like instead of 41,500, I am sharing 41,200. That means 300 point further I'm moving. So what is the advantage here? Advantage, or what is the difference? So both the things I'm moving 300 points away. So what is the difference you are feeling? Okay, range is extending. That is one difference you can see between 300 and 200. But again, max profit is reducing for the higher range. So this is a trade-off between whether you want higher range or higher profit. Okay. And then what happens? So to the max profit to the max loss. If suddenly, okay, the range might be seems to be something like this. If tomorrow or suddenly within, because now expiry is on, but this expiry we took it on 19th, right? Today is the date of 17th. So that means only one day before expiry is tomorrow, and then thereafter the expiry move will come. Suddenly, if there is a 1,000 point move, what will happen? Immediately, if something is announced, yes, right? So somewhere 42,000 to somewhere around 41,000. So your loss will be, though your theoretical profit is somewhere here around 139. So that is only for the expiry, but immediately if it moves, you will be in the loss of 5,000. Right, you're able to see the screen. So the FTM will be somewhere around 5,000. Only on the expiry day, that too at expiry, you're going to get this to be 0. Right? So far is fine, but again, you need to understand what is the risk you're going to take. So same way, if I take this, so removing to old, so right, 41,600, somewhere around 41,600, and here somewhere around 42,600. So now what is happening? Range is small, but there is a profit, increase in the profit. Moreover, again, so if it makes a move, again you are going to face some loss. What is the loss? All those things you are going to understand, right? So if you ask me whichever is better, so if you in terms of look for profit, which is better? Let's assume that you wanted to trade with 10 lakhs. So whatever I'm going to teach is I'm treating that you have a base capital of 10 lakhs. Okay, with that you are going to start looking for opportunity where you can slowly, steadily, without much pressure. Okay, whatever the rules I'm going to share, with that if you trade, you will not be under much pressure. So that is the entire idea behind this session. So let's assume that now you want to deploy 10 lakh capital. Okay, which one is to be better for you? In terms of if you want a higher profit, or so you can treat this as, so the more closer you come, there is a probability that you will get large heavy profit. But in the meantime, what is happening? When market suddenly moves, you will also face little more loss. Alright. So how do you come to trade at reducing? So how you decide? Basically, how you decide. So should I start with 300 points away, or should I start with 700 points away? So you might have a lot of dilemmas, right? So should we go with the premium? Should we go with the distance? Okay, there will be lot of dilemmas, right? So if anybody is doing already strangle, on what basis you select? Either based on the premium or based on the points. So what you prefer, guys? Basically. So on points. Okay. And also it depends upon when you are going to initiate the strangle. Okay, based on that you need to consider. So I will share whatever the logics I will be using. Okay. So generally we will come to in detail which is the strikes I will choose. But again, so when it comes to strangle, people have this dilemma whether to choose this one, because now there is a clear statement that when you take far, right, that means what? Your profit potential is less. Agree? Right? When you take far, that means when you take lesser premium, then profit potential is less. When you take closer premium, profit potential is more. Agree? Till this point, do you agree? So too far if you take, profit potential will be less and there is a chance of profit also less, right? This is the general understanding about these things, right? When it's too close, so you have a huge chance of getting higher profit, but with a small move, you need to start adjusting, right? That is the one understanding. So you should decide on whether should it come too far or too close. So I will at the end of the session, I will explain like what I am doing, but just in the meantime, we will go through what are all required. Okay. And then weekly or monthly, which is preferred. I've just listed down all the things. So weekly, what will happen? Premium will be less and expiry is short. That means what? So maximum within 6 days expiry will come. Let's assume that now tomorrow is the Thursday, right? That means if you are starting new expiry, max to max 7 days you will have, right? Premiums will be less compared to monthly, right? Obviously somewhere around 200 point or 100 point you will get, right? If you are looking for another 300, 400 points away. Then what you can do, you can trade 4 to 5 trades in a month because this is a weekly. So max to max 4 to 5 trades you can always take. And moves will be little tricky to adjust because on a lower time frame, lower premium. So suddenly if the market moves 1,000 points, okay, you need to be very swiftly available on your feet and understanding to do the adjustment. Okay, because you need to follow the smaller time frame. Whereas again, both have different advantages and disadvantages, but whatever I'm listing it out is the characteristics. Okay, for the monthly, generally premiums will be high and expiry is long. That means what? At least 20 to 30 days you will get a premium decay days, right? So that means what? You can play within the 20 days and max to max 1 or 2 trades only you can trade in a month. Okay, moves will be little easy. See, it will not be always easy, but relatively it will be easy compared to weekly. Okay, again, all the risk management adjustments needs to be little bit doing on a little higher time frame you can do. So it means what? So if you ask me, if you are a trader who can sit at least a daily 15 minutes once in the market, you can think about going weekly. Okay. Then if you are a trader or doing some work or swing term business, but I do not have time, I can see only 2 to 3 times only market. So entire 6 hours, max to max, I can do 2 to 3 hours only max. If that is the case, you can go for monthly. Okay. So like based on your availability, you can choose whether weekly or monthly. So basically weekly means again, moves will be little tricky to adjust and you need to be in the front of terminal or looking at the market regularly. Whereas in the monthly, again, moves will be little easy to adjust. So that means what? Looking at only 2 to 3 times. So that means what? An hourly chart or 2 hour chart you can refer. So based on that, you can always make your adjustments. Okay. Again, risk management will be done on higher front time. So again, there is no point in other advantage. So one is, so here what we'll do, if you can trade 4 to 5 trades in a month, even 1% if you target every week, assuming that 70% accuracy of your trading. Okay, so probably 70%. So out of 4 weeks, 3 weeks might be in loss, 2 weeks might be in profit. So still you will get 2 to 3%. Whereas when it comes to monthly, only one trade you are going to take, and that trade can be a profit or can be a loss. Okay, it's a almost 50% chance that it can be a profit, 50% chance it can be a loss also. And doing it monthly has its own advantage. And also need to understand what are all the things you should be looking for when you need to decide whether weekly or monthly. Okay. And then risk management. So when it comes to risk management, let's assume that before going deep into this detail, let's assume that now we have a capital of 10 lakh. Right? What is your capital? So maybe I will just open a simple Excel so that it will be much easy to understand. Okay. So my screen is visible to you, right? So let's assume that what is your capital? Your total capital is somewhere around. Okay, you can just scroll down and you can scale down or scale up your capital according to this. Is just a exercise which I am saying. So how risk management should be. Okay, generally, so you know whatever strategy you are going to take. Okay, you know what is your max profit, right? Again, your max loss is, frankly speaking, this is infinite, right? Though it can be managed, but suddenly some moves like 2020 Corona is going to happen, or whatever happened in 2000 and all is going to happen in the fall or rise. It can be anything, okay, because we are opening both the sell C and sell P. Okay, it doesn't mean that only on the downside you are going to see issues. So you know what is your max profit based on the strategy which you are going to see, right? So when it comes to, so what you are doing, you are selling a OTM call, OTM put. So in terms of risk management, see, it is up to you to people. People do not want to face any pressure. They can still do only this. Okay, people who are already in the market, because sometimes I also do like this. And when I'm little fearful or not sure about what is happening, then I will do the protection. Okay, it is a complete discretionary to the people who wanted to deploy. But why I'm saying this, something like this. So if you see earlier, the loss were somewhere around here, right? Now if you buy a call somewhere here, so the loss is limited till here, right? So what you can do? So what is the max rule generally? So how do you select? So where to buy? Already you are selling some, let's assume that you are selling 400 call, 400 points away call. Okay. Then how do you buy this put? On what basis? Should I buy 1000 points? You tell me, like, what is your rule or what is you feel like better? So let's assume that 400 points away call and put I'm shorting. What do you feel like is a better way to keep this risk? Is it point wise better or whichever is better? Generally I go with the max loss. Okay. So how do I say is, let's assume that now if my profit is somewhere around year 1p. Okay. This is my loss, max loss, right? So whenever, generally what I do when I'm a little conservative, I always go my max loss should not be greater than 3 times of my profit. Let's assume that now 10,000 is your, let's assume 10,000 is your max profit. Then on a conservative side, I will not go beyond max loss 30,000. Right? So if I fix this amount, then how I'm going to fix my risk? So you know, so let's assume that again coming to this sheet itself, coming to this sheet. So now you know what is your max profit. So 3 times, right? 3,000 is the, so let's assume that now 3,000. So where I should buy? Somewhere around here, not, which I should not leave it beyond 10k roughly, right? So my strikes will be somewhere here, right? So what I should buy? So 41,000 and here 43,100. So this way what you are trying to do, you are trying to reduce your pressure. Okay, whenever you are trading in the market, first of all, so this you can keep it as something like this. Okay, so max to max after this, what I generally keep is, if you are trading conservatively, go 1 to 3. If you are trading little aggressively, you can go 1 to 5. Sometimes I go 1 to 10 also initially, then slowly reduce the position sizing. So risk management is something like this. Okay, do not try to keep open. Okay, by doing this, what is going to happen? Obviously, again, capital is going to reduce, right? That is what you all know. We all know that capital is going to get reduced, right? So what is the capital now? Earlier we seen this. For 1 lakh, what is the thing we have seen? 2 lakh is the roughly we kept it. Right now, if I do this, only 60,000 is required. Right? So should I take? So let's assume that your capital is 2 lakh. Then should I take 3 lakh of this? Can I take 3 lakh of this? So it again depends upon how the position sizing will be. Like, do you understand now? First of all, risk management. So what is the max risk you are trying to do? So as a conservative, I generally take 1:3. Okay, so max to this reward, this risk to this reward. Okay, so this is the max profit and max loss. Max to max 3, not more than that. If I'm a conservative trader, if I'm little aggressive, yes, 1:10 I will go. But as soon as when market is favoring my move, no, so I will try to reduce my drawdowns. Means reduce my loss. So how do you reduce this? So once you start getting in the profit, you cut this leg and start putting here. That means you are going to reduce your losses here. Right? Meantime, here your profit also going to come down because of the premium you are going to pay. But same way, you are going to slightly reduce the premium. So this is what I mean by risk management. Because you see, when it comes to again, so you have 2 lakh, right? 2 lakh. Can I risk all the 2 lakhs by taking 3 lakhs? Okay, that means what? 59, so 60. So should I take 1.8? So if I fail, what will happen? 1. So 12,000 is the max risk I'm facing. So 12 into 3, that means what? 36,000 is going to be my max loss. Can I take that risk? It depends upon again you. Okay, initially risk management per set you can say. So what I say by position sizing is, first of all, you should know whether you should do protected strangle. So the thing is, even if you feel like do not want to get stressed, even you can buy little longer also, no issues. As and when the market comes in or market stays in the range, you can slowly come in each day by day or 1 hour once. Okay, so that you can do it as a part of risk management. So this is like if suddenly tomorrow market is doing something. So even when we looked at the market was when we started the session, market was around somewhere around 42,980, right? So suddenly, just like that, market within, right, last 5 minutes, the market has moved something like this, right? We don't know because yesterday also it has moved something like that. Suddenly from yesterday to here, right? If something like that, if you wanted to concentrate or if you do not wanted to get into trouble, then think about this kind of. So how long again? How long is the how much protection you are willing to give for the loss you are going to face? So that is the idea. And when it comes to position sizing, yeah, when it comes to position sizing, so how are you going to position your size? Somebody is typing something. Can you be mute on your own? Can somebody? Sorry. Okay, so whenever you wanted to join, please mute yourself. If you want to ask anything, so you can switch on your mic and ask me. So again, when it comes to position sizing, now as I asked, so let's assume that now you have 2 lakh capital, but the position requires only 49K. So what should be my position sizing? Generally, always what I say is use only part of your capital. So if your 2 lakh is there, use only part of the capital. Then again, what part? So should I take only 59,000 or should I take 2 lakh? Should I take 3 lakh? So how do I decide? Right? This is the next rule. So max loss, if I trade now, should not be less than, sorry, so should not be greater. So my max loss should be 5% of my total capital. So that means what? If 5% is max to max, 10K, right? By this looking at this strategy, if I, right, by looking at that strategy, So what is the strategy? So we were going to right. So by looking at this strategy, so what is happening? Even by deploying 1 lakh, my max risk is at more than 12,000 rupees. So that means what? Even though I have 2 lakh, I should not deploy more than 1 lakh, because if I deploy max to max, what will happen? I will lose more than 5% of my total loss. So this is my second rule. So for generally position sizing. So let's assume that we will come to whatever we have done last week. No? So we will come to that, but before trying to understand what are all the general logics and concentrate on compounding gains. So 2 to 4% is the actual compounding we are concentrating. So no need to put all the money in the stuff, right? So by looking at this, what you are getting. So even if you get, okay, 2,500 rupees, 2 to 3 weeks, okay, 2 lakh is the capital, right? So for 4 weeks, if you are going to get 1,500, 1,500, 1,500 without seeing much of the loss, still you are going to get 6,000 rupees, right? So 3% of your monthly total capital you've done, not on 59K. I'm not going to concentrate anything on 59K. So whenever you put your capital on the line, so only for that you need to always concentrate on whatever the return and whatever the risk, right? So what you need to concentrate on the position sizing is use only always part of the capital. The next rule is how much part. So look at the strategy which you are trying to deploy. Start looking at the max loss. Okay. So if I deploy in multipliers, so max loss should not go beyond 5%. Okay. My 5% is the max loss what I can face. And then concentrate on compounding. So let's assume that now market seems to be like very soft, very calm. So if I wanted to deploy all the 2 lakhs, assuming that so no bus, last 2 days no move. So if I can deploy within 2 days, I can get 1,500. So 1,500 into 3, within 2 days, I can get 6,000 rupees. Don't do that. Okay, because you are concentrating only on the compounding of gains. You're not trying to concentrate within 1 day, should I make money, nothing like that. Okay, so try to understand that factor. So because many people go bankrupt because of this, whatever last 2 slides we have seen. Okay, so it is not the strategy. Okay, it is the how you are going to know your risk management and how you are going to control your position sizing. That is the main key. Okay, any strategy I will teach, but only thing is how you are going to deploy is again based on your psychology, your position sizing and your risk management. Okay. Sometimes what I said, I even don't take this triangles also, but again, so if suddenly some 1,000-point moves comes now, I will be keeping in mind, if I have that fear, suddenly then I should buy this leg. That is the ultimate motto. Okay. You don't know when it will happen, but when the moment you thought of like, okay, something like this happens, what I'm going to do? Okay, let me see tomorrow. Don't. So when it comes into your thought process, always call for this leg. Okay, so that is called risk management, first of all. And then how you are going to use your capital is the position sizing. Then come to adjustment rules. Okay, so first understand this, then we will see how we have done the current weak positions. Okay, how I started, how I have done, but try to understand all these rules. Whenever, see, because you are selling a call and put, right? Let's assume that I'm selling somewhere around 100 rupees. Okay, basic simple rule. When this option becomes 200, whenever I enter, when it is blindly doubled, then I should look for adjustment. What is the adjustment is secondary, but I should look for adjustment. So that's assume that now if I take a trade of 100 rupees, now it is trading around 210. So what needs to be done? Adjustment needs to be done. Adjustment can be anything, right? It can be something like this. I sold a 200 rupees call. I bought only 20 rupees option to protect that. Now assume that now 200 becomes 400. I can roll this, okay, or I can shift my adjustment to keep my loss lesser. Okay, types of adjustment depends upon your strategy, your style, your current understanding of the market. Whether you're little fearsome, then don't look aggressive adjustments, but you should do adjustments. When you need to do adjustment, let's assume that for 70 rupees, if I take a trade, roughly 140. If it is going, that means what? Whatever I am expected to gain, it is already gone. So I need to react to that. So this is the best, simpler adjustment rule which I follow. And then again, let's assume that now I am taking 100 rupees both. What is happening? Not doubling. Basically not doubling. Not doubling. What is happening? This becomes 150. This becomes 60. Then also you can think about adjusting. When the premium is not in sync, that means what? When there is a difference of more than 50% or more than 70%, you can keep. Generally what I do is, as long as when my range stays there, when this reduced, now what I do, for 10 rupees I would have bought some call, right? If this is a call and the call reduced, so here from here I will jump by paying 3 rupees, some 300, 400 points. So that times I can reduce my risk also without shifting. Okay, it ups to you how you are going to do. So whether I should cut my 60 rupees call and take 150 rupees. So if you have to understand what is the max risk you are taking, what is the max gain you are saying. So what is the change in the payoff you are looking. So that you need to understand. Then you can aggressively. But these are all the triggers. Let's assume that you are trading. Let's assume that in a monthly you are trading. Assuming that you are a office going person or doing some business. So say you sold 200 rupees, okay, or 400 rupees call in a monthly. And then if it is trading around 800 rupees, that means what? Without even looking at the market, you should be ready to do some adjustment, because it is asking you to, boss, it is knocking you twice. Boss, come and do some adjustment, boss. Don't just like that sit and do idling. Okay, so that is the first rule. Then the next rule is, if the difference between, so let's assume that I am taking 800, 800. Okay, now what is happening? This is becoming 1000. This is becoming 200. This happens, right? Many times this happens. So in this one, what you need to do, either you should cut this 1000 and make it to 300 rupees or 400 rupees to match this premium, or you should cut this 200 or take the 1000. It depends upon what aggression you are in, so you can shift it, you can roll the position. But when it is doing something like this, that means what? The balance in the market, because generally strangle is what? It is a range bound market, but the range is little more. So as long as the market is somewhere in the between, no problem. When it is trying to go at the one of the extreme, what will happen? One premium will rise higher, the other premium will drastically come down. Right? So that is when you need to start adjusting. So again, you can use the trend also. So we have seen in the first video, right? In the first video, we have seen what is a trend. I will say with example how I manage the current peak position, but before that, try to understand. So let's assume that if you wanted to identify the trend, so 15 minutes, let's assume that my trend is there. So that means what? Whenever this closed above this level, then again you can start adjusting on the upside. Again, whenever it is closed below this, you can start. So you can use reference as the trend also. Whichever trend you wanted to follow, you can follow, because I generally say 15 minutes is the short term. So minimum 5 minutes you can look on. Okay. So this, if somebody wants to go much in detail, you can go refer to the first session. So where I discussed like how you identify the trend, how you can identify the trend. Right. So this trend can also be, so assume that now you taken a position something like this, okay, market is something like this. Okay, this and all, when it is important, whenever I'm taking little higher risk, let's assume that here I generally said 1:3, let's assume that now if I've taken 1:10, okay, market is still in the range only, but it seems like trending. Then what I should do, at least cut my this position to make it here. So at least 1:5 I have to make. If there is a trending, if I see any trend change in the indicator, whether it is going or not, that is next. So when I see a change in trend, what I should do? My risk on that side I should reduce. So that is the basic of adjustment. So how you use that trend to tighten the risk. Again, always check after doing the adjustment. Okay, so you might be doing something. Okay, let's assume that now market has moved here. Okay, you have taken somewhere here 100. This call become 200. Okay, this put has become 50. Now what you are doing? You are trying to cut this put and coming here. So that means what? The new payoff will be something like this, right? And sometimes if you sell more, then it will be little higher also. Then from here, right? From here, if market makes a move, try to understand what is your max risk. Okay, even before initiating your adjustment, because there is a chance that you can always put in your this one, right? Like now if I wanted to do any adjustment, so you can see. So let's assume that now market is making a move, right? Now this is making a move. So that means what? So if I look at so now it has become 49, this becomes 74. Then there is a change in shift of the premium. Let's assume that now if I want to cut 41,600, I want to book it, right? 1 lakh. So around 66 rupees if I wanted to sell. What is happening? Payoff is getting more, but what is happening? The risk is also slightly increasing. Right? Always have the after whatever you do now, always have the check on what is the max risk on any direction. Okay, doesn't mean that it needs to be only on the trending direction, but concentrate on all the direction, because any day suddenly some spike will come, either in the up direction or the down direction, right? So these are all the rules you should be concentrating. And then, so if break even is nearing, so that's what I'm saying. So if break even is nearing, what you can do? You can either shift this leg outside, or you can shift this leg outside, or if you are fearing that this much was the initial max risk, okay, you can tighten your risk. That means what? You square off this position, pay a little premium, make this risk something like this. Okay. So when the break even is nearing, yes, you can do it. Or when the time is bypassing, that means what? When the profit is coming, right? Then you can tighten your risk. These are all the basic adjustment which I generally follow. Again, what is my simple tricks? So when you wanted to, you will see after this slide, we will see last week how I taken, on what basis I have adjusted. We will go through all the things, like, because it is there. All the trade updates are there in our Telegram, right? We will take the Telegram. You will see why I have taken. So again, we will complete to the my simple tricks. Generally, what I follow. Okay, when to initiate. Generally, if it is weekly, max to max 10 days before expiry. That is what. So if today is a Thursday, so max to max 1 week before, right? So either on Monday or Wednesday you can initiate. So 10 days before expiry you can take. Again, if you ask me what is the premium, so which one is the premium? So generally what I concentrate is, you concentrate on 0.25 delta or 0.3 delta, that's it. So if you ask me what is 0.3 delta, so just, okay, so we already seen this. I'm just, okay, I will just open a new leg. Okay, so if next week if you are trading now, let's assume that now if you are looking at Bank Nifty, and you wanted to trade a next week's triangle, right? So in option sign 25th I'm taking. So now you will have a doubt. So sir, which the premiums are little more? Should I concentrate on 200 rupees, 300 rupees? What I should do? So generally what I say is, leave about the premium, concentrate on something like this between here and here. Okay. So 0.25 delta to 0.3 delta, not closer. So when you have a question of should we come closer or should we be little far? Generally what I follow is somewhere here, 0.25 delta to 0.3 delta, both in the call side and both in the put side. Again, so what will happen? So even same way, for monthly, if I'm taking, what I should do, just 1 week before the monthly expiry, so 35 days to monthly, I can take again. So here you can take again 0.3 as a delta reference, right? So any doubt in this? When to initiate is the clear, right? Because I wanted to say whatever I'm following, and then I will explain whatever we have done current week. So how I have done, on what basis I have done. So in case if you wanted to follow, what you should be doing. So when to book profit? Simple. 0.5 to 2% of always total capital. Okay. So what my plan is, 10 lakhs is the always capital. Max to max, we are going to deploy only 3 to 4 lakhs at any point of the time, based on the position sizing and all those things. I will just initially show how I decided. Okay. Then if the monthly, then 4 to 6% of total capital. So W means weekly, monthly. So when to book profit? So whenever you are getting 4 to 6%, because your plan is to compound 2 to 3% on a month-on-month basis. So if at all on a total capital, if you are getting more than 4%, okay, try to book early also, no issues. Right? Then, no sir, it is in profit, okay, but when it is closing, when to book? So you can book like this. So 1 day to expiry. So that means what? By max to max, if you are initiating any position on the weeklies, before Wednesday, try to close. That is one idea. See, you can hold it till expiry also, but generally what I do is 1 day before expiry and 10 day before expiry monthly. I will try to close, or I will try to make my risk very smaller. Okay, and then if suddenly something is happening which you don't understand at all, and market is at any point of the loss, so whatever is happening, suddenly something is happening and suddenly some 50,000 loss if your position is showing. Okay, you don't need to understand what is happening. Suddenly, first of all, so that means what? Something is crookedly happening in the market. That is the reason why, based on whatever the position sizing, whatever the risk management you have done, still you are facing the loss. The first thing is, you just press the panic button. First of all, close your position. Then, because only 5% of the capital is down at any point of time, then you can slowly come in, because at that time what will happen, then premiums will again keep in, okay, because of the VIX rise. Then you can slowly determine your plan, right? So these are all my simple tricks from my side, right? And this is just a part of my team announcement. So if somebody wanted to open any account with Zebu 8 per lot, okay, 8 per lot brokerage in options, so you can reach my team. So this is just for an purpose of keeping it. I just kept it, so not want to spend too much time on that. Okay. So now, shall we jump into what we have done last week? So till now, did you have an idea about what needs to be done or what? If any doubt, please ask me. Otherwise, we will just jump into what we have done, because I do not wanted to do all the paper tradings. Okay, I do not wanted to teach it on paper. I just wanted to teach you guys whatever I'm doing. So with the proof, so how I have done. Any queries do you want to ask? You can either keep in chat in, or in case if you wanted to speak, you can switch on and ask. Once this is done, we will see what is I have done, why I have done. So what is the adjustment I have done? So what is the trade? Where is the trade? Where is currently situated? So how I'm going to manage? So that should I book now or should I close now? So no doubts, right? So that means what? You're understanding first of all what is straddle. So which is the 2 for or 2 close which you need to take. Again, weekly or monthly, you can decide what you want to do. So risk management. So why I'm going to buy, right? Then position sizing. So why I'm doing this? Okay. Adjustment rule. So when to adjust? Okay. When to adjust? What are the triggers to adjust? How I am adjusting? I'm already discussing in the live channel, right? So my simple tricks, whatever is there. So now let's go to the current trade which we were going through, right? Whichever the current trade we are going through. So where you can check. So you can just open our Telegram channel, right? So go to our Telegram channel. So this is my Telegram channel, right? I'm just switching it on. So when I was started, so when was the message that we are going to do? Start strangle. So will be explained everything, right? Second session once done. All right. So I'm just okay. So this is the January 13th, right? When you click in, so do you agree this is a real trade first of all? Right? So when it was done, so January 13. January 13 means what? So on Friday, right? Because you can initiate, you can enter on Tuesday also, no problem. You can enter on Tuesday also. Now maybe today I will show how I am going to enter if time permits, because now almost at 3 o'clock we need to see whether I am going to book the position. If I book the position, today itself I will adjust. Okay, what is the trade here? Very simple. Initially we sold somewhere around at that time what the market was. Okay, so you can see from here itself. Okay, 600 points roughly away. Right? Selling was somewhere here. Buying was somewhere here. Getting the points, right? So how the payoff will look like? How the payoff will look like? Right? So I'm just going to pull the same trade which I've already saved also. So right now, okay, this is the trade. Okay. So how do we did that? So I'm just going to take the trade. Side by side, I will compare whatever I've done in Telegram also. Okay. So initially what we did become 115, 133, right? So what is the rule for edge? Somebody will ask, sir, what is the rule for edge? Basically, how I do is 10% of premium to 15% of premium. I will allot to the edge. Okay, it can be 1:4 also risk reward, or it can be based on the premium. So basically here what I done, so call wise I just paid only 10%, roughly 10%, but here I paid 15% because on the downside I don't want to keep my risk more. So that is the reason why I give 15% here. So basically you can use this rule also. Right? So what I did, nothing. So after that what happened immediately? So we will see chart also. Right? We will see the chart also. January 13th, right? So for that reason, I'm just. So somewhere around here, right? January 12, January 13, right? 41,976. But immediately after that, what happened? Such a move, right? Because you need to see like these moves only. Then you will try to understand what is the logic behind all these adjustments or how you are going to manage. Right? What has happened? Right? When was the trade taken? So you can check in your own also because this telegram is free for you. So time wise also you can just check. Right? What was the time? Around 11:23 I took and around 1:30 I started managing. Right? Because why managing? Sold become almost double. Right? Loss is also increasing, sold become almost double. So my trigger is there. Now you tell me what I should adjust. I can either shift this 242 again 130 rupees also, or else I can roll over this to here. Okay. What I done was I have done something like this. So I have rolled one leg of 31,300 to 42p. Even I explained there. Right? Completely adjustment one shifted. So 1:30 p.m. Right, shifted one lot from PAT out of 3 lot. Updated position. MTM is 4.3K. That means what? Out of 10 lakh, I deployed only 3.5 lakhs. But whatever I'm targeting, so whatever the profit or whatever the loss I'm concentrating only on the 10 lakh. Right? So MTM is 0.4% of my 10 lakh. Right? After that, what happened? After that, what is the next adjustment? Adjustment 2, on the very next day, January 16th. Right? Gap up open, right? 928 gap up opening. Right? What I did? Added again 42 put. 90 rupees, 90 rupees. Right? So this is the updated position. Okay, and this is the updated payoff also. So now this payoff is something like this. So when you shift, you should also aware that what is the max loss you are going to see. Right? So you should be always aware. So at that time, what is the max loss? So 0.6%. Right? Because after I take the trade, market immediately within next day, 11:30 I took the trade. Very next day early morning from 40,000, right, 900 to 41,900 to 42,780, right, whatever the range you took, it has already crossed, right. So what we did, very simple. So why we did that? First of all, trigger is we sold it for 133, it becomes 260. I did not touch anything on that, but at least adjustment trigger is there. Next is what happened? Morning, I sold this for 91 rupees, right? 42 put, right? So it in the trade book you can check. It is for 91 rupees. Right? Where is the trade? Just a second. Yeah. This is the trade, right? Yeah. So this is the trade. So 91 rupees we sold. So again, on the same day, what the market has happened? What has happened to market? Opened, but just like that, because at this place we sold 42 put for 91 rupees. From there it has doubled. So it means it has only come down. Right? So what you need to do, simple, when the 91 becomes 180, right? 91 becomes 180. You should do the adjustment. Adjustment means what again? So market has went in like this, but again coming down. So what you should do? Either you should do exit the added leg, right? So if you just go through, right? So you can see on the morning I did something. And meantime, in the morning also what I did, so as the time has passed in, what I am doing, I am shifting my edge. Remember the rule, as the time passed by, I will shift the edge a little closer just by paying some little premium. So that means what happens? So my this risk reward, because at that time market seems to be on the higher side, so I am reducing my risk on the upside. Right? That is the idea. Initially, my risk was something like this. Right? Somewhere around 60,000 rough to the scale. And after doing this adjustment, what has happened? Now I said moving the edge. Nothing has happened, only time has passed. And the market is moving in this direction. So what I did, reduced from almost 65,000 to max risk somewhere around 48,000. Right? So that is the one thing. Again, so again, note this point. So 42 PE today taken at 95, roughly at 95, almost doubled. So what I should do? First of all, I should exit the position because already I took a call. It has doubled. Again, I shift in. Right? So by this time, what will happen? Whatever the call has risen, I would have come down, but this I would have lost. Right? So what I did, I just moved that. See, you can just go through, everything is there, nothing is been hidden. Okay, so whatever I did now, so 42 put whatever I done now. So I just bought this and then shifted that to 41,300. So the new payoff is something like this. Right? So you have two triggers for here. Let's assume that now this has become twice the rate. So 95 has become 180. Right? 180 to 190. That is the reason for adjustment trigger also. And one more is just take at this time. Looking at the market alone. So at that point, on 15 minutes time frame, again this trend has been down. Signal the down. So I'm just trying to cut down the troubling leg in that direction. Okay, that could be a two trigger. So if you just try to understand, I will be sharing all the PPT, whatever I am discussing today in the group itself. Don't need to worry. Okay, so there are two triggers. One is again, market was on the upside very next day. Again, on the trend is up also 15 minutes. That is one trigger I need to do, or else the call which I sold for 130 is become 260 to 270. That is a one more reason for trigger. And the trend also, okay, whatever trend I am following, I am just sharing. So 15 minutes is the lower time frame. Again, what is happening? So down, right? So I just only shifted 41,300. So after that, what has happened? After that, nothing has happened, right? After that, nothing has happened. Even I just said today being a day, we are going to see. So even in the morning, this is what happened. Nothing happened. No changes today. Positional strangle. So running 2K profit, right? So again, coming to 10 lakh. For a 10 lakh, right? For a 10 lakh, it is only 0.2%. So that means what? Generally what I do is I do 0.5 to 2%. Today, since this being a lot of adjustment, even I can book at 0.5% also, right? 0.5 means 5,000 rupees. If I get, I can aram se book, right? This is a weekly and within 4 days, I'm going to book, right? So no trade. So after that, what happened? Around 106, what I did, I shifted edge closer, okay? Initially, I sold at 180 to 186 rupees. Now, what happened? Though not doubled, but trading below 42,000 on closing minutes basis. And even if you look at this, the data, right? Again, trend has become sellers. So fearing that it might double. So that is the reason why I added 1,42,400 call at 113. So it was trading around, if you look at here, it was trading around somewhere around So trading around 220 rupees, but I did not sell for 220 rupees. I sold only for 100 rupees. Right? So here what I'm doing, sir, though I started initially fixed loss now, I slightly open up, but only thing is I wanted to square off as soon as my target is. So like this you can just exit thing. So if you come to now today's position, what has happened? So even this is there, this is what today position is. So now we are almost at 4%. Right now it's almost at the middle. Right now it's almost at the middle. So if I wanted to do what I can do, I can at least buy one lot and keep. So my risk is now, max profit is now 20. If I lock it here, become 40. So started with a little higher risk reward. Now it becomes 1:2, still in profit only. Right? When the market goes down, what I need to do? I have to either cut down this or book the profit. Right? Getting this point clear, guys? So if you wanted to look at the trade. So if I wanted to look at the trade, so what I have done? I have done something like this. So now market is 2231. So now I'm saying, okay, boss, now done. So I'm going to add adjustment. So what I'm going to do is I'm going to book a 2 lot. So I'm buying this. I'm going to add this 2 lot. Right? Meantime, what I need to do, I have to cut down my leg also. Almost 6 rupees has gone now, right? So 6 rupees. So where I should buy? So even here itself, I can move my entire legs, right? If I want to do something, I can move here itself, the entire legs. Right? But I do not want to do anything. I just wanted to keep it something like this. So now if I adjust, what I have done? Right? What I have done? Because now within, if market makes a move, then my PL will go down. So that is the reason why now I sold 2 lot, right? 42 I sold 2 lot. Now this is the current, right? Right? 2 lot for somewhere around 99, right? Roughly. And I booked 41,300 2 lot. So now what has happened? I just saved this. Okay. So this way you can do, or else if you feel like, so there is a query right between us, which is the best way to do something like, so now if you look at this, what is going to happen? So earlier I started with a, what is the leg? 113 rupees and 130 rupees, right? Agree. So when I will do aggressive adjustment on the upside, so on a 15-minute scale, if again market is going to close above this, then I might aggressively cut down my risk or aggressively adjust my position. Otherwise, I am just trying to keep whatever the zones are there. So please note down. So adjustment idea is very simple. So whatever the key swing points, now will you able to map it up? So let's assume that now if I wanted to see, so on a 15 minutes time frame, so what I'm trying to do is, so this is the last swing point. This is the last swing point, right? Basically, he is looking at, this is my last swing point. So am I trying to accommodate all my payoff within this zone? And then, so once this zone broke, then I have to exit my position. That is the one idea which you should be considering, right? And now, going through this, our session, we had a confusion that whether should we go for. So we had a confusion, right? We had a dilemma that whether we should go for low return or high return, something like that, right? So too far or too close. So we said when we take too closer, profit will be higher. So I took this one, right? 133 rupees and 110 rupees. So too far, if you wanted to look at one position. So I've already trading that also. Just going to share with you. I have not updated in Telegram. Okay, so to two of my clients, I did like this. Okay, so this is one trade. So initially, I took like this. So not that trade. Okay. So now profit of 6.63. Okay, so whatever the things I've done, very simple, slowly adjusted. So you can just concentrate on whatever I've given you as a point. So again, used is only 4.6, but total capital you can say it as 10 lakh. Okay, for a 10 lakh account, you should use this, right? So I'm just going to pull that account. So whatever is there, so this is the trade. So whatever it is there now, it is there. So all the profit, whatever it is there now. So what I'm trying to do is I'm enough with this. Okay, so I'm just trying to book these positions. Right. So net wise, what are all the positions? Okay, I'm just going to square off this position. Right, net quantity nil, nothing. So in this one, if you see, so I will just, okay, what is the margin itself? And only on a 5 lakh capital I did this. But so what is the total profit booked? Somewhere around 6,400. But only thing is, if you are a learner, use a little conservative position sizing, because here I used only 5 lakh capital, but booked 6,000. That means what? So I can say that this is a 10 lakh, though I calling it as 10 lakh, but used only for 5.6 lakhs. So 1% is okay. But generally when you wanted to learn now, so assume that if only 10 lakhs is there, then you think about taking position like this. Okay, so that is the whole idea behind that, because see, I know little light of market, and even I'm okay with the little risk I'm taking. But when you are taking now, always ensure what are the points we've been discussing. Okay, so somebody is asking, please tell how to adjust. How to adjust is very simple, but see, you need to concentrate. Let's assume that market is going here now. What you need to do? First of all, you should reduce your risk. That is the basic first concept of adjustment. Then this will already decayed. You can shift here. Then your payoff something will like this happen. Then suddenly if you feel like market is going to go up now, then here you may feel a loss. So you need to decide initially whether how you are going to adjust. Okay, that is the idea. See, whatever I'm trying to do is, so now I think we have done how to adjust on the positional straddle on the weekly, right? Right. So even this, whatever I done now, so even so this is there now. So now if you look at this, so neck to neck you see, so 42,400 is this call. So if again 100 rupees I have made, if I'm feeling like this I'm doing something now, if I'm feeling like a little fearful, what I should do? I should react to this, right? Now 100 becomes almost 183. So if I feel like no, okay, this should not be my trade, I should not done that. So if you do anything now, so what is it? Because market is also 42,300, tomorrow 33,400. So if I wanted to do something like this, you can do always like this. Right? Or else if you're okay with this profit, because tomorrow is the one day before expiry, you can wait till tomorrow. Or else, so if tomorrow there is a gap, how do you are going to manage? Right? So what happened? Earlier I was having this call, right? 10 rupees call. Then I bought it for 23 rupees. So whatever the loss now, at least this one is trying to give. Right? That is the all idea behind whatever. See, you may not understand all at one go when it comes to whatever we are discussing now. So you may not understand all at one go, but try to go through whatever the rules I'm giving now, because I'm just trying to showcase you what the rule and what we need to be done. Let's assume that now I take a. So now I will just try to recap. So whatever we have gone through, right? So whatever we have gone through, we are concentrating more on positional. These are all the touch points. Okay, what is chart straddle? So selling OTM call, OTM put, and then payoff we have seen. So these are all the major terminologies you should be well aware of. What is the range? What is the max loss? What is the max flow? Because with this only you are going to concentrate on risk management and the position sizing, right? And then, so too far or too early, too far or too close. So there is a conception that if you take too far, profit will be less, but it is not the case. Where I took only 70 rupees, 80 rupees, no adjustment, nothing was required. I am booking almost 6.6K. Okay. Whereas I took 130 rupees, but still it is in the profit of 4,000 rupees only. Okay. So don't go by the misconception that if you sell far away, you can make a lot of money. If you sell for a little closer, you'll always be in trouble. So you need to understand first all the process, why you are taking the position. Just a second, my algos are closing all my positions. Okay, So just give some time for the screen to update. Okay, then we will kickstart. Since most of my accounts are big accounts, so I'm just, so as we talk now, so everything has been done. Even I don't know what is the outcome of my algo. We need to see, because market has completely one side and this side, right? So only, so what has happened? No problem, right? These are all my 25 lakh basket. So looking at, so good profit only. Now looking at, we will discuss this later. Okay, even I just wanted to see what is the outcome of the day. So which one to do? Again, weekly or monthly? So same way, monthly if you're doing, again, follow the same rule. If in any doubt, please keep in touch with me. Okay. You'll always be in touch with us as a part of Z2 Pro. Okay. So I showed you on weekly, because for monthly, I cannot guide you for 1 month or two, because it takes time also. If at all, if you're taking, please follow with me. I will try to help you, or just follow the rules what we are doing. Okay. So whether should we go for monthly or weekly? So what to do? So when to do? And then risk management. So why I am buying this? So initially conservatively I said if this is 1 max to max risk I can keep 3 for a conservative trader. So if you're a very aggressive trader you can go for 7 or 10. But as soon as the market time goes in, you have to reduce your risk. That is the whole idea. So you can be protected strangle also, or it can go only strangle also. Right? Doesn't mean that I should do iron cut or something like that. Nothing like that. So try to understand what is your psychology or what is your comfort zone. Accordingly, you trust to understand the market. Then position sizing. Okay, no need to take screenshot and all. Okay, I will share this PDF with you in the Telegram. Okay, so when come to position sizing, use only part of the capital. Then max loss should be max to max 5%. That will tell you how many lots you should be trading. And then concentrate on compounding, right? So market seems to be like torturing, right? On a 5 lakh capital, somehow I booked 1%. Even if a 10 lakh capital, if you book 0.5%, still it is a good amount, right? Right? No need to worry much about it. Okay, so just wanted to showcase you like how you can, and then these are all the basic adjustment rule. First rule is when you sell something and it becomes double, that is when you need to react. Then use trend to adjust or tighten your risk. Then whatever you do now, always check max risk, not only in the direction of the trend, also on the other direction. Then when break even is nearing, tighten the hedge, or when the time is bypassing, tighten the hedge. These are all the basic rules. I think whatever I have done on a live market, okay, last 4-5 days, if you see, market has started here, suddenly gone, made all adjustments, suddenly fell, then do all adjustments, suddenly gone, now suddenly down. So now it is doing like this. Right? So even after all these things, I just followed only these rules, nothing else. Right? Whatever I did, I just explained you with a clear logic what I did. Only thing is you need to have a proper, clear mindset about what you're doing. Okay, that is the major thing. So again, what are the major simple tricks? When to initiate? Basically 10 days before expiry in a weekly. Monthly means just 1 month before. So 1 week before the expiry of the current month, you can start taking. So when to book profit? So 0.5%. So that means what? Of total capital. When a 10 lakh, if you are making 5 lakh, so even after all this struggle, if I'm making 0.5% on a weekly, then I can easily book. Right? One of the account I'm managing, but one of the account I just book. Right? For me, trading in the monthly, so you can keep 4 to 6% of total capital. So when to exit in terms of time? 1 day before expiry. So tomorrow, whatever happens, I should exit my trade. So profit already booked in one account, profit is still running on, or the adjustment is going on. Okay, I will say not say profit. The adjustment or the struggling is going on in the other account. So I can decide tomorrow I should exit because it's a weekly, right? So universal exit when max to max 5% of the capital. So if in case if you wanted to open any account, you can keep in touch with us. So mention in the number. So this is my team number. Okay, any doubt related to whatever we are discussing. Okay, as in terms of 02 Pro, this is my number. Be part of our Telegram channel, Twitter, wherever you try to follow there. Okay, so this is very simple, and next session will be something like this. So now we have touched this strangle, right? So we should now touch straddle, right? So what is the type of straddle which I am doing? So to maybe next session will be concentrating on this. Okay, this is a positional. Okay, just give me a second. I will just. So okay, this is my positional. Generally, what I do is again I will explain all the rules and logics. Okay, if you look at the trade, so this trade is done on a account. Okay, not a paper trade, nothing like that. This account is running on a real trade. So whatever the profit is, so even I have marked that also. So again, I have a rule-based stuff which I am generally following. So I will just pull that trade also in case if you wanted to understand. Okay, simple. Yeah, this is the trade. Okay, this is the trade. So as per my rule, no adjustment has come in. Okay, already again. So this trade, if somebody wants to do now, so done with a 15 lakh capital. So only 30% is always deployed. So if I calculate all returns for a 15 lakh, so you can think about either booking. So I will explain when it comes to straddle and strangle, how I do my protection, on what basis I do adjustment, and what. So maybe the next session we can concentrate on straddles. Okay, so most of the things whatever I'm sharing is I'm trying to showcase you how I'm personally managing. Okay, it is up to you to decide whether you can do it or not. So I'm trying to showcase like whatever is I'm following. Okay, so whatever is here, only that I followed for the last week. Again, so maybe in the next session we can think about it. So now maybe market time is going to end now. Maybe just give me some time. I will look my all the settings. So on a 5 lakh, 25 lakh account, how the market is. So personally, how it is for you. So on a 3 minutes time scale, if you look at the market, so how was the market? Complete zigzag, right? Seems to be like, sorry, this was yesterday, even today. Complete zigzag, right? So no issues. So for me, so my basket has done extraordinarily well. So no loss for me. Okay, this paper trade is I'm doing some kind of extensive work on more additional, so that profit might be little higher, but that is forward testing. So concentrate on accounts like this, because these are all the ZBO account, even 25 lakh account. Okay, so good profit, right? So considering all the logic and so how the market has behaved, still in good profit only. Okay, so as per my setup, no trade done on 5 lakh basket. Only 10 lakh and 25 lakh basket has been done today. Generally on Tuesdays we avoid trades. Okay, because generally for this reason only. And we worked on some strategies which can even fetch some money. Okay, leave about a small loss. Right, so that is the idea. So now it's time for you to ask any queries. And one more thing, like, yeah, I just forgot to mention, my team has interested me to do. So if somebody is opening account with us, okay, and trading with 5 to 10 lakhs capital, and all these whatever we are teaching now, my team will guide you, or my team will personally guide you for all these trades, how we are doing all those things. Okay, so this learning I've already shared, because this is a live learning. I've already shared in Telegram. Whatever we have done in the last week, I've updated all the rules I've given. Okay, there is nothing like paper trade. But still, if you feel like this is a good one, and if you still wanted to have continuous support from my team, do one thing. If you're already trading, okay, this is a very less small brokerage only, because if you look at all the trades, we'll be doing one or max to max 1 or 2 lot at a time. Okay, so considering 20 rupees per lot on a Zerodha, this is still better. So if somebody wants to have my team guidance on how to do all this kind of stuff, kind of hand holding. Okay, if somebody opens account with us, 5 lakh to 10 lakh, either in the Zebu or Motilal, so you will get exclusive sessions on these things. So you can think about it. Otherwise, no issues. So whatever we have discussed now, that is more than enough for you guys, because that is a live learning. I've already shared whatever, so nothing else I have done. So all the things were clearly mentioned, right? All the rules, all the logics, whatever I have done. So when to book, when to initiate, all these things. So now next session will be concentrating on straddle. So that also I was showing, right? What was my trade? Only thing is you don't know the logic, right? You don't know the logic, when to enter, when to initiate. That was the you need to concentrate on, right? That we will take care. That we will take care in the next session, right? So this was the trade. So when to take the trade, how to adjust, all those things we will see in the how to manage positional straddle in the next session. And then we will see more of a kind of live learnings, okay, which will be much more useful to you guys. So hope you enjoyed the session. Thanks for watching. Any queries is there? Maybe we'll wait another 1 or 2 minutes. If you want to ask any query, you can either raise in the chat or you can switch on your mic and you can ask directly. Else, in another 1 or 2 minutes, we can wind up the session. So thanks for your time, guys. And this session will be recorded and will be posted in YouTube for people who missed the session. So anybody want to ask anything? You understood? Well and good, no issues. Please feel free to keep in touch with me. Okay, any issues, any queries, you can always reach my number. This is my number. Okay. So thank you guys.